Hi, I'm Jim Jubak, and welcome to today's YouTube video for December 14th. Today's topic is where do we go from here? We've got the CPI number on yesterday, the 13th. We'll get Fed meeting after I've done this video this afternoon on the 14th. So the question is putting all those dots together and connecting them. So if you like this video, please give us a thumbs up. If you would like to see more of these videos, we're doing about 3 weeks, so you can get notification of when we're doing them. If you subscribe to my YouTube channel, it's free. If you want more, you can go to my free site that's got 3 portfolios, a dividend portfolio and some long-term stuff, some shorter-term stuff, and that's free. Did I say free? Free at stubakpicks.com. And then there's my paid site, which has got 6 portfolios, including some options and ETFs and short inverse ETFs, and that's stubakam.com. You can find all that stuff down below. First, I promised, or threatened, if you prefer, that I would sing today a Christmas carol, and that I was going to do the Walt Kelly Pogo Christmas Carol, Deck Us All with Boston Charlie. I'm just going to inflict the first 2 verses on you. So anyway, me, 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 me. Deck us all with Boston Charlie, Walla Walla Wash in Kalamazoo. Nora's freezing on the trolley, swallowed all the cauliflower alligaroo. Don't we know archaic barrel, lullaby, lullaby, loo. Trolley Molly don't love Harold. Boola boola Pensacola hullabaloo. My favorite line is the Trolley Molly don't love Harold. So got that in. Anyway, okay, today's topic, if you're still with me after that, is where do we go from here? As I said, we got the CPI number yesterday, and it was better than expected on inflation. Economists were expecting 7.3%. Instead, we got 7.1%. That's the annualized headline rate. Economists were expecting a core rate of 6.1. We got 6.0. So all that's better than expected. And in the hour after the results came out, the stocks all rallied. The S&P went up about 1.6%. And now the question is what the Fed's going to do today, this afternoon. The consensus, and I think it's absolutely right, is the Fed is going to raise 50 basis points. But then we also get the dot plot, which is the first one since September, which will revise where the Fed thinks the peak is and for inflation and interest rates and all that. That's important, and that will move the market too. Where do we go from here? So I think what we're going to see from here is on the evidence of the reaction to the CPI number and the likely reaction to the likely Fed number is we're going to see a traditional Santa Claus rally. That's the last days of the closing year, the first couple days of the new year, and I think that'll take us maybe finally over the 4,000 level convincingly. The move up right after the CPI number was up to about 4,050. That's still a little bit below the 4,080 where we stalled the last time. We need to go back through that and sort of convince people that 4,000 is not where we're stuck. So we'll see that. The question really is not so much whether the Fed will raise rates again. The question is for how long and how many, and where's the peak inflation rate. I think the sense that inflation is coming down is absolutely right. I think we're going to see inflation come down. We're going to see the Fed gradually back off from aggressive interest rates. But the question is, well, can we get inflation down to the Fed's target of 2%? We're at 7% now. I think the next 2% is relatively easy. After that, things get really hard. And that's going to be the crucial question for 2023. How long does it take us to go from like 5% down to 3% or 2%? I think until we get 2% visible in the headlights, we're not going to see the Fed back off completely. Here's a chart that shows you sort of what the problem is as we look at it. This is the S&P, and you notice that we've got this peak around 4,080. The 200-day moving average today is about 4,036, which is where we are. And then you've got this nasty high back in August at where is it? That's like 4,300. To convince me that this rally is going to go on for a while, would have to get back through that. I don't see that happening anytime soon. The question is whether we then get a revisit of the September low or the October low at around 36, 35, and then of course there's the June low back at 36 as well. So all those things will depend on whether when we get into, say, February, we see, as many on Wall Street are currently fearing, a drop in the growth rate for earnings. Corporate earnings are historically taking a bigger bite of the total economic pie than on average. So it's unlikely we're going to see earnings ratchet up on that. And the question is, with inflation still in the pipeline, where the margins come down, and then of course there's inflation itself, how quickly that comes down, and when the Fed pauses. All of that I think is going to become increasingly sort of on top of mind as we get to February, March of 2023, and that's really when the rubber hits the road for this rally. Thanks very much for watching. This has been Jim Juback. If you like this video, please give it a thumbs up. If you want to see more videos, subscribe to my YouTube channel. That means you'll get notification when we do the next one. We're doing about 3 a week. You can go to my free site for more stuff, including takes on where we are going in 2023 for the end of the year. And that's jubackpicks.com. My paid site, jubackam.com, has got more stuff, more overviews, and 6 portfolios instead of 3. And that's, as I said, jubackam.com. You can find links to all that down below.